Good morning, everybody. Happy Thursday. It's November 6th, 2025. Quick shout out to Mrs. Lang. That would be my mother. Her birthday tomorrow. Happy birthday, Mom. Let's talk about the markets here. It's been a pretty volatile week, right? Certainly with a lack of news and a lack of economic data coming because of the government shutdown still going on. We had quite a bit of earnings coming out, a little bit of good, a little bit of bad, but for the most part, markets are pretty much trying to consolidate and digest some of the recent gains that they've had over the past couple of months, and I think probably in a good way. It's a little bit healthy to come back a bit in the markets and not get too frothy as we come into the holiday period, coming into Thanksgiving and Christmas and so forth. You want the markets to pull back a little bit, give you an opportunity to get in, give the dip buyers an opportunity to get in and buy the markets. We've had dip buying opportunities numerous times over the past 6 months, and I think this is probably just going to be another one of those. We had some good earnings this morning from Datadog, and you can see it right over here, 187 to 190 right now. Stock raised guidance, so forth. Really strong earnings. Stock's up $32 right now. We have some of these calls in our service, and we've loaded up on them in the chat room as well too. So that's going to pay off nicely. Qualcomm down a little bit on good earnings. Also, Robinhood up a little as well. Had good earnings last night. AppLovin up nicely as well. So tonight we'll have a couple of names like the Trade Desk. Not really interested in that one. In fact, I'm writing up a bearish report on that one. Today, DraftKings coming out. That stock's also looking pretty bearish. Also Airbnb. Tomorrow, Wendy's, Constellation Energy, Fluor, and Six Flags, and a couple of other names as well too. So it's going to be an interesting couple of days. A lot of Fed speakers out today. I think 7 of them will be talking today. Not Chair Powell, but as far as the markets are concerned, look, I'm going to tell you that look, with a lot of volatility right now, you have to have some protection on. You've got to have some puts on, even though we did finish up positive yesterday. We were down quite a bit yesterday. The day before, Tuesday, was down huge, and we had some volatility in the markets. This is going to save you from having a lot of volatility in your portfolio. Even if you lose a little bit of money, it doesn't matter. So volatility, the VIX is coming down a little bit this morning. It's at 1774. Let's take a look at a chart that I like right now. I started adding some Russell 2000 calls yesterday, and you can see the IWM, which is a representative of the Russell 2000, came back down and tested that 50-day moving average. And it seems to be an area where I think that the market for the small caps can bounce and get a good run into the end of the year. I think it's probably got a good run to maybe about 260, 265 perhaps. That'd be about 10%, but small caps generally can run very far in a short period of time. So the last time it tagged the 50-day moving average was back in the beginning of August, and it wasn't much longer before that hit the new all-time highs. Right, we paying 218 and hit those all-time highs right here at about 245, 247, and it was only about two and a half months before that happened. So I think that we can get a good run. That was much further than what we're talking about here between now and 260 to 265. SP 500 looking pretty strong as well too. Again, having a little bit of a retreat here right near this 20-day moving average. The NASDAQ did test that 20-day moving average, as did the Dow Industrials. A little bit of a pullback here makes one feel a little bit shaky. But as long as we understand the context of a pullback is within a long-term uptrend, then we should see the dip buyers stepping in there and picking up the pieces. Now, of course, things structurally break down here in a different way. That's a whole nother question to answer. But as it is right now, I will tell you this. I'm going to give you some advice here. I'm seeing a lot of stuff, especially out on social media, talking about how terrible things are. We've had 3 Hindenburg omens for the past week or so, and those are negative. Yes, sure, they are when they cluster, but you know what? If I look back over the past 13 years, we've had a lot of these things, and they really haven't triggered um, any huge declines like they used to do back in the 60s and 70s and 80s. But I will tell you this: be careful of what people are saying out there. Um, People will create a narrative that fits their own point of view and try and spread that along to all of you guys. And so you've got to be careful with what's out there. Okay, this is harkens back to the days of the Yahoo message boards when people were really um, uh, really not understanding what they were talking about, yet they would try to influence other people who didn't know any better. So pay attention to what the market is doing. Stay focused, right? I know it's really hard to do, especially when you got all these other influences out there and you really, maybe you're lost. Don't pay attention to the worries, the nervous Nellies, the worries out there. Look, if things start breaking down, there's going to be a lot more to discuss there. I will be here talking about it as well too. But as of right now, I think this is just a pullback within a longer term uptrend. Don't pay attention to these doomsayers, the ones that pull statistics out of their butt and they just can't support it with anything other than just negative feelings and negative comments, right? Negativity will never get you anywhere. Listen, if you can create a narrative with some objective data, an objective point of view, and not try and influence anybody with your views or opinions, that's great. But as of right now, I just don't see the market breaking down like most people think it's going to do or think it has already done. So are we going to hit 7,500 like Tom Lee thinks by the end of the year? Probably not. That's a stretch. That's over 9% over the next 2.5 months. That's highly unlikely, but I certainly think that 7,000, maybe 7,200 is in the cards before the end of the year, especially if we get this big enough dip that the dip buyers can step in there and start buying stocks again. So that's going to be it, everyone. Have a great day. Trade well, and remember, keep some protection on, raise some cash, be ready for the next move. Like we always talk about play it with a little bit of caution right now, especially with the high volatility in the markets. Let poor liquidity as well too. All right, enjoy yourself, enjoy the weekend, and I will see you guys all back on Monday morning. And don't forget, Tuesday is Veterans Day. It's also Singles Day, Alibaba's biggest trading day of the year for selling products online. So we'll have that to talk about next week as well. So again, enjoy the weekend, trade well today. And if you're in the chat room, I'll see you guys there a little bit later on today. Thanks. Bye.